Greetings, everybody. Welcome to Liberty Call. Today is Monday, August 28th, 2023. I hope everybody's having a fantastical day out there in the interwebs. You can see my boy Jake back here. He is itching to go play because didn't get to do a lot of playtime, I guess, over the weekend. Well, we had some rain. It was kind of cold. Did get to go to a comedy show on Saturday. The weather, it was in somebody's backyard up in the Denver area, so it was kind of fun. And I got to hang out with a bunch of libertarians and anarchists and people like myself. Anyways, all right, got a lot of green on the screen today. I guess people are feeling better about the markets. Looks like mostly green across the entire globe for today. So we'll take it where we can get it. I mean, unfortunately, I kind of think we have to get through a bottoming of the market before we really think before I really think things are gonna, we'll have smooth sailing for a number of years. But once we get through it, I think we'll be okay. So, all right, well, let's go ahead and jump into the numbers. Oh, I almost got ahead of myself. Sorry. If it's your first time watching Liberty Call, glad you're here. Thank you very much. If you could do me a favor, please. Yes, you. I'm talking to you right there. Hit the subscribe button, hit the follow button, hit the like button. Give me some thumbs up. Hit the notification bell so you know when I go live. Now we can go ahead and get into the numbers. All right, Dow Jones was up 0.62%, 213 points, closed at 34,560. S&P 500 was also up 0.62%, closed at 4433. NASDAQ up 0.84, closed at 13,705. The VIX fell 3.83% today. It's currently at 1508. Canada was up 0.95, Brazil was up 1.19, and Mexico was up 0.5%. Over in Europe, Germany was up 1.03%. The UK was flat, up 0.07%. France up 1.32%. Netherlands up 1.14%. Spain up 1.62%. Italy up 1.19%. Switzerland up 0.69%. And Portugal up 0.52%. All right. Mexico. Both Russian exchanges were in the green. MOEX up 1.31%. RTSI up 1.35%. And the Asian markets, starting out with the Nikkei in Japan, was up 1.8%. Australia up 0.63%. New Zealand up 0.32%. In China, the Shanghai was up 1.13%. The Shenzhen component up 1.01%. China A50 up 1.17%. DJ Shanghai up 1.14%. Hang Seng up 0.94%. And the Taiwan weighted was down 1.72%. Kind of the outlier there in the Asian markets. All right. So, all pretty good for today. Tomorrow's a new day, so we'll see what happens there. All righty. Well, let's go ahead and hop into the weekly update. All righty. Stocks fluctuated last week, jostled by fitful bond yields and a headline news before ending strongly following Fed Chair Powell's comments on the monetary outlook. The Dow Jones Industrial Average slipped 0.45%. The S&P 500 gained 0.82%. NASDAQ rose 2.26%. And internationals added 0.78% for the week. All right, stocks managed gains. Stocks rallied on Monday on upbeat sentiment over the earnings release from megacap semiconductor company scheduled for midweek, only to see that momentum fizzle the following day on weak retail earnings and a credit downgrade of a handful of banks. Stocks resumed their rally on weak economic data, which fueled hopes for future Fed dovishness, which, based on Powell's talks on Friday, don't think it's going to occur. They also rose on expectations that earnings from leading AI chipmaker would validate the AI narrative that propelled markets in the second quarter. Despite a blowout earnings report, stocks turned lower as investor attention quickly switched to Fed Chair Powell's presentation scheduled for Friday. After some initial jitteriness, investors responded well to Powell's comments, posting gains to close the week. Powell stands firm. Powell spoke on Friday at the Fed's annual economic symposium in Jackson Hole, Wyoming, asserting that despite considerable progress, inflation remained too high and additional rate hikes may be in the offing. He acknowledged that previous rate increases had not yet thoroughly worked their way through the system, so caution about further hikes was needed. Investors reacted to Powell's comments far better than in August of 22, when a hawkish presentation sent stocks lower. Powell also addressed a growing feeling among investors that the Fed may eventually raise its inflation target rate to 2.5% to 3%. Why was 2% always their target? Powell rejected the idea unambiguously, stating that the 2% target would remain the Fed's initial goal. Yeah, they probably wanted to raise it up just so they could start cutting rates sooner than later. All right, economic data this week. Tuesday, we have consumer confidence and the job openings and turnover survey, the JOLTS report. Wednesday, we have the ADP processing employment report and gross domestic product. Thursday, we have the personal income and outlays and jobless claims. Friday, the employment situation and the ISM manufacturing index. Companies reporting earnings this week. Tuesday, we have Hewlett-Packard and HP Inc. Wednesday, we have Salesforce and Viva Systems and CrowdStrike. And Thursday, we have Lululemon, Broadcom, Dollar General, Dell Technologies, and VMware. All right, and that is the weekly update. Was it exciting for you folks? Was for me. All right, let's go ahead and jump into the market recap. S&P 500 higher as industrials shine on 3M rally. All right, let's see. Get my notes up here. The S&P 500 advanced on Monday, driven by a surge in industrials led by 3M and a steady climb in the tech sector. The markets are preparing for a wave of upcoming data that will heavily influence the Federal Reserve's policy decision next month. The S&P 500 saw an increase, 0.5% increase, while the Dow Jones experienced a 0.5% decline of 163 points, and the NASDAQ rose by 0.7. It was not a decline on the Dow. It was an increase of 163 points at the time of this writing. 3M Company marked a significant 5% surge as it nears a settlement exceeding $5.5 billion to resolve over 300 lawsuits alleging the sale of defective earplugs to the U.S. military. No way. They would never sell defective earplugs to... I never wore mine, so that's probably why my hearing is so bad at this point in my life. This agreement safeguards the company from a potential larger liability. Financial experts estimated that a successful lawsuit could have incurred a cost of around $10 billion. All right. Another industrial player, Generac Holdings, contributed to the upward momentum with a more than 4% gain. The manufacturer of backup generators is expected to experience a continued surge in demand due to extreme weather conditions, with Tropical Storm Idalia predicted to strengthen and make landfall as a hurricane along Florida's Gulf Coast. The demand for backup generators is likely to increase. Well, if you don't have that thing installed by now, it's probably a little too late because it takes a little work to get everything hooked up. I think it's probably a 3 or 4 day install. I got a quote 5 or 6 years ago here at our house out here in the mountains. And it was reasonable, but never went ahead with it. But power doesn't go out that often, so I wasn't that worried about it. All right. Positive news from Boston Scientific also impacted the market. The company reported favorable outcomes from a clinical trial of its pulsed field ablation system designed to eliminate heart tissue causing irregular heartbeats in patients with atrial fibrillation. The stock climbed over 5% after the trial demonstrated that Boston Scientific's system was non-inferior to existing treatment options. This week's market direction will be significantly influenced by crucial economic data releases, including fresh inflation data and the July monthly jobs report scheduled for Thursday and Friday. These data points are expected to shape the Federal Reserve's policy outlook as it approaches its September 19th and 20th meeting. Recent indications suggest that the Fed may opt for a prolonged period of higher interest rates. Federal Reserve Chair Jerome Powell's recent remarks were deemed relatively hawkish, reflecting the committee's ongoing struggle with higher than anticipated inflation amid a stronger economic performance. These remarks by Powell are expected to align with the upcoming economic data, providing further insight into the central bank's potential policy decisions. Yeah, I just don't see that the Fed is going to move a whole bunch right now, just simply because inflation's still high, and until inflation gets down below 2, they're just going to leave it as it is. Powell is stuck to his... Powell has done everything he said he's going to do all through this, the last, 15, 16 months of rate increases, and has not wavered at all. So if he were to become dovish and cease rate hikes or start cutting rates, I would view that as completely outside of everything he said up to this point. So I frankly don't see it. All right, one last article to go through comes from our friends at First Trust, Mr. Brian Westbury, their chief economist, and this one's titled "Stocks Look Pricey." All right. The core of our evaluation process of the stock market centers around our capitalized profits model, a tool that assesses the market's value based on economy-wide profits across decades. This model takes quarterly profits, excluding Federal Reserve related gains or losses, for almost 70 years and discounts them by the respective 10-year Treasury note yield each quarter. Comparing these discounted historical profits with present value ones with equal weight assigned to each quarter provides an average to estimate value. As the most recent data, the 10-year Treasury yield stood at 4.24%. Using this yield in our model, assuming profits remain steady, the calculated fair value of the S&P 500 is 3170. And where are we at right now? The S&P's at 4433. So this value is notably lower than the market's Friday close at 4406. It's essential to understand that the cap profits model isn't designed for daily trading decisions. Stocks can remain significantly over or undervalued for extended periods. However, the model effectively gauges stock attractiveness relative to historical norms. Currently, the model indicates that stocks are pricey, and considering the factors needed for fair value to match current market levels, it's probable that stocks will face challenges in the coming year. For the model to project fair value like Friday's close of 4406, the 10-year yield would need to decrease to 3.05%. See, again, there's an inverse relationship. The higher the yields go up, the lower the value of present value of stocks is, and vice versa. So that's why during, basically since the housing crash back in 2008 and 9, interest rates were kept at zero. So that's why the stock market boomed so dramatically over this last decade, is that interest rates are kept super low, which provided the valuation, which gave, just through the roof valuations on all of these securities, which, yeah, makes your portfolio look good, but are they really worth that? Maybe not. Alrighty, where were we? But the scenario would likely involve an inverted yield curve, sluggish nominal GDP growth, and potentially weaker profits. Alternatively, the model for the model to align with 4406, profits would need to surge by 39%, while the 10-year yield remains at 4.24%. However, this is implausible. And as such, a profit boost would likely correlate with elevated long-term interest rates. Given the yield decrease could lead to a recession and diminishing returns, while a sharp profit increase might lead to higher long-term rates. The market seems to be stuck at current levels. This situation leaves one primary mechanism to align stock prices and fair value, a decline in equity values, meaning your stock prices are probably going to come back down. So let's do some quick math while we're sitting here. All right, so where was it? So they're saying that the fair value is, right now we're at 4406 and we take 3170. So the stock market would have to drop by 1,200 points, or the S&P 500 would have to drop by 1,200 points to get back to that fair value number, which would be 1236 divided by 4406, about a 30% drop, 28% to be exact. So not excellent, unfortunately, in the grand scheme of things. All right, where were we? All right, given that a yield decrease could lead, oh yeah, we already talked about that. Decline in equity values. It is important not to hastily sell all stocks based on the model's projection. Instead, investors should concentrate on their long-term goals and risk tolerance. The model serves as a reminder to exercise caution and to allocate resources to sectors that are reasonably priced relative to the broader market. Allocation is particularly crucial in circumstances like the present. All right, well, that's everything I had for today. So again, be careful out there. The market is very overvalued. So depending upon where you want to put your assets, just be careful, because things could get really rocky really soon. And, we just unfortunately don't get a heads up on, what black swan event is going to, throw a monkey wrench into everything moving forward. So, all right, well, that's everything I had for today. If anyone needs anything from me, please go to dsafinancialgroup.com. All my contact information is there. Hope you have a wonderful evening, and I'll talk to you next time. Adios.